What's up you guys, welcome back to another video. Most of you guys actively trading in the market or at least keeping a close look on the prices of various other cryptocurrencies out there might be aware of the crash that has just hit the market. Crypto tumble has wiped $600 billion off the digital tokens in a week. The price of Bitcoin has quickly fell below $30,000 in a flash crash, with its bottom somewhere around $29,000. The Ethereum temporarily dropped below $1,800. Dogecoin dipped as low as 25 cents, and all of this causes sudden of a change from enthusiasm and excitement for making some money to complete wreckage and fear of maybe things could go down way more than expected. That's because China recently placed a ban on the financial institutions from using cryptocurrencies as a mode of payment. It also feared that the mining operations should be shifted towards sustainable energy before they could be used and implemented on a wide scale. And the market volatility is going to shake a lot of people in and out of the market before the things are going to get more stabilized. And so this is an absolute issue that we need to address. So let's start by talking about what's going on, what's causing this, the primary issues that could causing it of a situation like this, and use this information to make money. And why haven't you smashed the like button if you haven't done that already? And now, without wasting much of time, let's get into the video. Alright, for some intro or background information, in the last few months, it has been absolutely a roller coaster ride for most Bitcoin traders, and undoubtedly, the past few months have been incredibly eventful for cryptocurrency. After rallying to a full time high of 2017 of $20,000, it started to gain some momentum in the mid of 2020, and this drive up in the price caused it to reach a $40,000, where Bitcoin actually managed to set a record of its own, becoming the most valuable cryptocurrency. However, it was mostly considered that this drive up in price was mostly caused due to institutional investors so as to use it to store some value in the case of some unlikely event to happen. This gave an assurance to most people out there that Bitcoin was actually gold 2.0, and the investors don't really need to be get so skeptical about it, and hence more and more small and stream investors started adopting it, which caused it to go up more and more in value, as it was seen as a pathway to store some value and a hedge against inflation. But things really got skyrocketed on February 8th when Tesla announced that it was going to buy Bitcoin worth $1.5 billion, along with the announcement that people could actually buy a real electric Tesla car using Bitcoin. Within 48 hours of that announcement, the prices of Bitcoin rallied another 20%. By mid-April, other tech companies began following and embracing the value of Bitcoin, combined with a flux of retail investors concerned about the impacts of another $2 trillion stimulus package. The price of Bitcoin nearly reached $64,000, nearly double the value of what it's trading for today, as most of the investors were concerned about the negative impact, which is primarily inflation, that could be caused by this stimulus, and so as to safeguard themselves against inflation. But as quickly as things started going back up since 2019 December, all time low, things started going back down. By late April, the excitement of Bitcoin started to fade away. Some investors started to take some profits. Prices naturally fell to $48,000, and so, which many would say was a normal condition. In fact, many felt that this was necessary, and many saw it as a buy in opportunity, driving up the price back to $60,000. And then after that, things were relatively stable for a while when this tweet came out and things started to get out of hands. The first thing is Tesla announced that it was no longer willing to accept any payments in Bitcoin for their cars due to environmental concern, and they would be looking for another alternative which is more energy efficient. And as you would expect, with a single tweet of somebody like Elon Musk, the market violently reacts, and which was primarily the first reason for as the massive sell-off that occurred. The second reason was mostly small and streamed investors felt that other companies would follow Tesla and soon will abandon payments in cryptocurrencies such as Bitcoin, Ethereum, and so on. And this thing got tremendously worse from there on. China came out with the statement that it would ban all financial institutions from conducting businesses using any sort of cryptocurrencies and warned all investors from making any sort of speculative investments. As of now, this ban is only on financial institutes and not on individuals. But who knows what? This could be pretty much just the start of rollout of the government restrictions onto various other cryptocurrencies. And in addition to this, the Chinese stock market has never gone out always smoothly. In September of 2017, China was the one to initially ban the coin offerings, and hence several exchanges were forced to shut down, which led to drop in the price, which back then Bitcoin had sunk down all the way to $4,241. But then in 2019, the People's Bank of China issued a statement saying that it would block access to all the foreign and domestic cryptocurrency exchanges, aiming to clamp down on all cryptocurrency trading. But what's worst of all is now that they have even forced this down on businesses, as the government is concerned about the safety of people's property and disrupting the normal economic and financial order. From there, as you would expect, the prices quickly fell below $30,000, which was actually the lowest since December of 2020. And if then you were expecting that this was the best time to buy in, well, you couldn't, because Coinbase, along with several other exchanges, were temporarily down due to an unproportionate order of supply and demand. So here we are today, sitting on an absolute roller coaster ride of cryptocurrency, which changes direction by any minute. The primary question to be asked here is that which way could we see the cryptocurrency going on from here? Well, as at the time of filming of this video, the prices are down by 40% from the peak of April, which you just started investing in the last 30 days. This pretty much does not looks good. But once you zoom out for this year alone, we are still more than 30% up. While you zoom out still, well, from an year ago, we are still up by almost 300% from where it used to be. Well, that doesn't mean that it can fall further lower. All this primarily depends on the news coming up, because as a matter of fact, it's still believed among the most elite and successful investors that cryptocurrencies actually don't have any real value. Well, personally, this was not something that was extraordinary. As a matter of fact, in any stock or cryptocurrencies, 90% swings on either side is pretty much expected and something that you should be prepared for. Now, on the positive side, there are plenty of businesses which have been taking advantage of it as a time to buy in. For example, the crypto bull Mike Novo said he would be buying more Bitcoin back around the $40,000 mark. Then we have a guy from the past, MySpace, who posted it on Twitter that he was buying the dip, and Cathy Wood reiterates that Bitcoin would be around a $500,000 mark in the long run, well, which practically as of now seems a wild imagination. However, these institutional investors are not immune to such sort of price declines either, with Square now sitting on $20 million loss and has no further plans to buy more. Tesla is also seeing a decline in their stock prices, because Bitcoin profits and loss is also going to determine the fate of Tesla share prices. But this is not the case just with Tesla. This actually applies to all those companies which hold their reserves in Bitcoin, where artificially things look good when the prices go up and artificially looks a lot worse when prices start going down. The underlying problem here is that there are too many people out there who think of Bitcoin and Ethereum as a gold mine and their take to strike rich, which is actually not the case. Instead, they should be using it as a smart way to further diversify to see any value and at all in those cryptocurrencies. Instead, they should be using it as a smart way to further diversify if they see any value at all in those cryptocurrencies. Because the reality is, during those 30 to 90% drop, those same people are most likely to panic sell, lose a lot of money, and then discourage to ever make another trade into the crypto market. Being a good investor is also about understanding the underlying value of the asset that you actually gonna go out and purchase, the amount of risk involved with it, and the market volatility, and understanding the importance of diversification. And so a 50% drop does not really affect your quality of life in a negative way, and you can continue moving in your life and investment journey without impacting a lot in your personal life. The point here is that you should not be going all in, and as it has a major chances of another fallback on prices which could again hit you back hard. Instead, focus on the asset classes that you truly believe in, and just enough couldn't be stressed on diversification. Try not to go all in into the cryptocurrency, and you shouldn't be investing that amount which you're not comfortable losing in the case of unlikely event that had to occur, and especially during a phase off period like this where it has lost most of its value and you see that it could potentially ruin your financial condition. The point of logical aspect is that you should try to craft your portfolio into as many different asset classes as possible. So that way, in the coming decades, you are guaranteed success without the chance of losing everything. One thing is clear and justified no matter what. Once you see somebody's screenshot of their own profits, especially on more speculative investment, chances are you have already missed the rally and you're gonna suffer losses if the initial investors, aka speculators, decide to actually cash out their profits. As a matter of fact, most of these coins actually serve no purpose, and continuous pushing into these worthless storage houses could actually cause you a lot of trouble in the long run, as most of them are mere scams. Also, it's not a good idea not to trade on the positive and negative tweets on behalf of Elon Musk and what he believes of cryptocurrencies, because even though these tweets do cause a major sell off or buyback, but the effects are gonna be temporary, and just trading on the basis of those tweets is just pure gambling. Here and out there, the future of cryptocurrency is still not clear. It could go up from here or maybe fall down further. If this is something that sounds worrying to you and might cause a serious problem to your investments and financial conditions, I strongly recommend you to actually reevaluate your position and look for what it could be heading for from here, and what percentage of your money are you comfortable with putting down in the crypto market. You need to realize the fact that cryptocurrency is an absolutely new thing and not enough history is there to actually back it up whatsoever. And investing into cryptocurrencies could actually mean that you're exposing yourself to a lot of risk, and hence reevaluation of your position is necessary. So, long story short, long term cryptocurrency is gonna perform any good is still doubtful, and whether or not this type of market volatility is gonna continue. In fact, it is pretty much expected that there could be a lot of volatility in the coming few months. If this shake-off has caused you to lose your sleep, well then it's time to reconsider your position. You should not actually look it as a quick way of being rich and not being affected emotionally by just a mere tweet of some person. And you should not be buying coins, especially those which just popped out of nowhere. Instead, come up with a plan ahead of time. Only invest a small amount or amount which personally you feel is right and comfortable losing off if things didn't go well. With that said, thank you so much for watching. I really appreciate it, and as always, make sure to smash the like button if you haven't done that already, so that YouTube would recommend you guys more and more of our financial related tips and discussion videos to you. Also, be sure to subscribe to our channel and turn on the notifications, and I'll be catching up with you guys in the next video.